Julie from Bell Direct. Tell us, what were volumes like today? Did that have a big bearing on the market action?
Live volumes going through the market today. We saw about $3 billion being traded, and altogether I think a bit of a disappointing performance by the Australian share market, given that we saw other markets around the region performing quite strongly and in positive territory. And on Friday we also saw the US markets reaching a record high as well. So our market down by 0.3%. And if I just bring up the 30-day trading chart for the Aussie share market, this is what it looks like. And you can see the last few weeks all we've been doing is really going sideways. So we've seen a period of consolidation on the market, and we just need some extra confidence to come into the market to boost it upwards and past the key technical level, which is 5,426 points. That's the golden ratio, the 61.8% Fibonacci retracement from the 2007 high to the low during the global financial crisis. So that's really the level that we're watching on the upside. Another thing that may have had a bearing is the Aussie dollar. This is the Aussie dollar during the Asian session today, and you can see that we saw a significant strengthening in the Aussie dollar. So generally when overseas investors invest in the Australian share market, usually they like to see a rise in the Aussie dollar, but for some reason that didn't help us today. So a little bit of a divergence on the market. We saw a rise in the Aussie dollar, but the market falling today. Having said that, you know, there were some bright spots on the market as well, and I think one area that really stood out were the building material companies. We saw stocks like CSR, James Hardie, as well as Dulux all hitting 52-week highs, and the iron ore miners. We're still seeing iron ore prices at $136.80 US a tonne. So Arium was up a massive 7.9%. We saw Atlas Iron up by 1.5%, and Fortescue up by 0.9%. So some disappointing volumes, a disappointing performance, but there were some specific bright spots on the market.
Yeah, also just we did have some more detail coming out from the reforms that were planned to be instituted coming from that China plenum that did wrap up last Tuesday. And it was really interesting because the expectations from that were so high. And last week we were talking about, you know, were we disappointed? Was it all a big fizzle? But it seems as if they're firming up some of the commitment to reforms. And I mean, generally speaking, this looks like it's going to be pretty good for Australia, wouldn't you say?
I think there's a lot of detail to be absorbing in these reforms, some good for Australia and some bad. And I guess on the good part, we will see an increase in infrastructure spending. So that will be good news for Australia. But also what we are going to see is that the Chinese government has been propping up industries that don't necessarily are not profitable. And they're industries like the steel industry, which have been receiving subsidies in terms of electricity, water, as well as land. And it looks like the Chinese government is now going to stop propping these areas and industries up, especially the steel industry, and stopping those subsidies. So we're watching the iron ore impact very closely there. Also, they are planning an acceleration in terms of property tax legislation. And we did see house price numbers coming out of China today. And we did see the biggest rise that we've seen since the 1st of January 2011. So property still remains a concern, and of course an easing in the one-child policy. So it was quite interesting to watch how the Shanghai Composite traded today. Altogether the market took it as a positive that we did receive more details in terms of these reforms, and the Shanghai Composite up by 1.4%. And we did see things like diaper companies, formula companies rising on the basis that they're expecting to see a bit of a burst in terms of more children in China. And we also saw the banks rising. But on the flip side, we did see a sell-off in those property stocks.
Yeah, it's been happening today. And Julia, you know, Warrnambool cheese, what can you say? Hitting a record height today, fresh record high for the company. Do you think that there's a chance that Bega, even though it says it won't come and improve its offer, might come back, or that we could see Murray Goulburn, perhaps more the likely player to come back and offer even more for this little Victorian company?
I think Bega Cheese is definitely still in the running. You have to remember that the bid on the table from Bega is now 1.5 shares plus $2, and that's the equivalent of $9.17 based on today's trading. So the fact that we have seen Bega shares rising means that it is the top bid at the moment, but the fact that it is a script and cash offer may make it less attractive. Both Saputo as well as Murray Goulburn are at $9 cash at the moment. Saputo is unconditional, whereas Murray Goulburn, of course, is conditional on ACCC approval and also getting more than 50%. But with such big stakes in Warrnambool cheese and butter at the moment, with Saputo not a significant stake, but Murray Goulburn with an 18% stake, Bega with a 16% stake, and Kieran Lyon with a 10% stake. Unless we see some of these players teaming up, a control to one of these parties doesn't seem very likely. So it's going to be very difficult for one of these parties to get more than 50% and make a takeover successful.
So